Hey, thank you for taking the time to click on today's video. Another educational video based upon a question that I get all the time, which is about life insurance and why permanent life insurance really isn't permanent at all. Here's the problem. People do not understand what's happening mechanically inside their life insurance policy, and we're just going to help you better understand what happens in permanent life insurance over the course of time, why it's potentially possible that the life insurance policy that you thought was going to outlive you might actually be outlived by you personally. Now, with permanent life insurance, it's more of a intention. The intention of a permanent life insurance policy is to pay a death claim regardless of how long you live. In other words, you never know when you're going to live. You don't know when you're going to die. You don't know, am I going to be, a person that passes away at the age of 67? Am I going to be a person that passes away at age 97? You just don't know. So having a permanent policy kind of gives you the sense of security to understand and to hopefully count on the fact that regardless of when that death does occur, there's going to be a death claim. And we're not going to get into the concept of why we have life insurance because there's lots of reasons. Maybe it's legacy transfer, maybe it's so you can spend down your retirement. It could be a whole host of different things. But that life insurance, let's just face it, it's not any good to us. It doesn't really perform the duties unless it's around when we die to pay that death claim. So when it comes to permanent life insurance, we're basically covering three kinds of life insurance that's permanent. We've got like whole life policies, we've got universal life policies, and we've got index life insurance policies. Today, I'm probably going to focus on the most popular permanent life insurance policy that is in existence today in the world, and that's called the universal life policy. And what we need to understand about a universal life policy is that it's interest sensitive. And for most of my clients, they bought these life insurance policies many years ago when they were younger. Okay, they were trying to be responsible adults. They had debt, they had a mortgage, they wanted to cover the family and provide some protection for them. So they bought this life insurance policy maybe back in the 80s, maybe back in the 90s. Well, let's think about that time frame. Back in that time frame, interest rates were sky high. Life insurance policies at the time were paying 10%, 12%, 14%. And when they bought that life insurance policy, the advisor, the agent that was selling it to them, said something like this: based upon today's cost of insurance and interest rates, I expect your policy to be paid up by X date. People have heard that a million times over, and it's not happening. Why is that? Today we look at life insurance policies and they're running on fumes. Why is that? We need to understand it. First thing that we need to really kind of understand is that the life insurance policy is going to come at a cost. And in your mind, you're not thinking internal cost, you're thinking premium. So let's say that this right here is your premium. This line straight across is your premium. Now, that premium is what you're paying every single month or every single year into that policy. And for simple math, let's just say that this premium right here that you're paying is a total of $1,200 every single year. The cost of your life insurance policy is going to be well beneath the premiums that you're paying in the very beginning stages of that life insurance policy. That could be, say, somewhere right here. And what happens is, over the course of time, that cost of insurance is going to go up. Now, it's going up because it's compensating for your life expectancy. The older you are, the closer to death you are, right? No one's hit that fountain of youth as of yet. So what's happening is, the internal clock is ticking and the cost of insurance is going up. Now, at the same time that you purchase this policy, you know you're paying this premium, they said that this policy was supposed to be paid up at some point, right? Well, what happens is you're paying more than the cost of insurance over the course of time. And so at the same time that the internal cost of insurance is going up, guess what else is going up? That is your cash value. And let's say that it's going up, for the sake of simplicity, right here. It's building, it's compounding, it's growing. Now, of course, the problem is that today we don't have the interest rates that we did back in the 80s and 90s. Now we look at these life insurance policies and they're paying what's called the guaranteed minimum interest rate. That could be 2%, it could be 3%. If you're really lucky, maybe it's paying you 4% on those really old policies. But watch what happens. The cost of insurance is going to tick up every single year for as long as you're alive. It's going to go up. It's going to be as guaranteed to go up as the sun rising in the east. And so what happens is, right about here, we have a major major problem. And that major problem is that the cost of insurance that's taking place within this policy has now reached a point where it is now exceeding what you're paying for premium. So let's say that you're paying your $1,200 still, but now the cost of insurance is $1,300. Let's say that the cost is right here at $1,300. Well, where's the company going to get the extra $100? Well, guess where they're going to take it from? They're going to take it from your cash value. That's the whole purpose. And so now where you had developed this cash value to this point, now guess what happens with the cost and the cash value? The cash value starts taking the hit, and now the cash value eventually runs out. Now the problem is that the determining factor is so variable. It could be the cost of insurance that the insurance company is charging you. That could be a major variable within the policy and how long your policy lasts. The amount of interest rate that you have earned over the course of the policy and what you're earning today, that's going to be a major factor as to how long your life insurance lasts. Another variable factor is going to be the amount of premium. And here's the problem that I see. The problem I see is that people back in the day when they first started the policy didn't have to pay much premium because obviously they were young and the cost was low. But more important than that, the insurance company and the agent who was selling the policy to you said, well, gosh, at 14% interest, this cash value is going to be compounding so fast that guess what? Right about this point, you'll be able to just stop paying your premium. Guess what? It didn't work that way. It didn't work that way for you. It didn't work that way for the life insurance company because the interest rates declined. And so as the interest rates declined, that meant that the cash value wasn't compounding as quickly. It didn't work out the way that they thought it was going to work out. So either A, you didn't fund the policy properly with enough premiums, or you simply did what the advisor told you was going to happen, even if you haven't had a conversation with the guy in the last 20 years. You stopped paying the premium, assuming that the policy was self-sustaining. And guess what? There wasn't sufficient cash value to keep the policy going for the rest of your life. In other words, you're going to run the risk of running out of life insurance before you run out of life. And guess what? Insurance companies love that. They love it when all of a sudden, the policyholder ends the policy, but the policyholder's life hasn't ended. Because that means that they got to collect premiums the entire time and they never had to pay a death claim. So how do we rescue the policy? Well, number one, the first priority is to get your policy reviewed. Have a fiduciary like myself or some other person who is who knows about life insurance, who specializes in these sorts of things. Look at the life insurance policy and to determine whether the policy is in good health. Now, how do you do that? You order what's called an in-force illustration from the insurance company. It is your legal right to call in and to ask for an in-force illustration. And what that does is that forces them to, as it were, hook up the EKG machine to your life insurance policy and determine how healthy it is, to determine how well it's going to do in the future based upon today's cost of insurance, based upon today's interest rates. And if you've determined that the policy is not going to survive, it's in poor health, then what I advise my clients to do, if they're in decent health, they don't have to be in perfect health, but in decent health, they need to really think about rescuing and taking the cash value that they do have left and rolling that into a life insurance policy that has permanent guarantees. Life insurance was called permanent, even though it really isn't permanent. But today, insurance companies have been absolutely so browbeaten with so many lawsuits because the permanent policy wasn't as permanent as what they touted it to be, that now insurance companies actually do have permanent life insurance policies. And the good news is, and this is the one thing that you will hear me say over and over again, though everything else has gone up in cost, life insurance is indeed one of the things that's actually gone down in cost. So chances are this means that you can take the cash value that you have within your permanent life insurance policy today, roll that cash value tax-free into a new policy, and actually maybe pay less, actually get more death benefit, actually pick up better guarantees so that you and your family can rest assured that you're going to have the protection that all these years you expected you would have. My name is Matthew Johnson. I hope you liked the video. If you did, I encourage you to give me a thumbs up. It always helps out. Share this with your friends. If you like our little weekly videos, hit that subscribe button down below and the little bell, and we'll remind you every time we have a video. And remember, it's up to you to make today a great day. Thanks so much for watching.